Hi everyone, you're watching Explore to Shine with Anu.
Before proceeding to the video, please take a moment to subscribe to my channel if you have not yet done, and also hit the notification bell so you will be notified when we upload a new video. With no further delay, let's quickly dive into this video.
This is the fourth session of Tally ERP 9, and in this video we are going to see about ledger creation. The content of this video will be, let's see what is ledger, how to create ledger, what is group, and to identify the groups for the given ledger. There are two ways in which accounting can be done: manual accounting and computerized accounting. In manual accounting, there are a series of steps to be followed for preparing the financial statement. So that is, whenever a transaction takes place, the first thing you have to do is recording that transaction in a book called journal. And the second step is classifying the transaction by posting or transferring those entries into the appropriate accounts in the ledger book. And next, balancing the ledger. We'll balance various ledgers account to know the net effect of similar entries. And from these balances, we are going to prepare a statement called trial balance, which includes the debit and credit balances of ledger accounts to test the accuracy. And from trial balance, two main financial statement, that is your final account, will be prepared. That is your profit and loss account and balance sheet. Profit and loss account will help you to know whether the business is running in profit or in loss. And balance sheet will help you to know the financial position of the business. So this is how manual accounting takes place. So whenever a transaction is being entered, that is being first entered into a book which is called as journal. And from journal, the same type of transaction are being placed in one location in the book called ledger. Next, we are balancing these ledgers, and from these balances you're going to prepare the trial balance, and from trial balance your final account, that is two main statements, your profit and loss account and balance sheet, will be prepared. So coming for ledger, so in manual accounting, actually ledger is a book where transactions of same nature are classified and grouped together in one place. And this will help you to know the financial position of each account. So it helps you in the preparation of trial balance. So how do you enter this ledger? For every account you have in journal, a separate account should be maintained. And for all the transactions related to that particular account, only one account should be maintained. Say suppose you have 4 to 5 transactions that involves purchase. There is no need of you creating purchase account for each and every time you have that account. So I think now you know what is ledger. In manual accounting, it is a book where transactions of same nature are classified and grouped together in one place. But in computerized accounting, as soon as any transaction takes place, that will be entered in vouchers. But you will not be able to make any voucher entry until you create ledger. So here, ledger is the most important part of your company's financial records. So in manual accounting, the first step will be entering into journal book. And your second step is ledger. But here in computerized accounting, your first step is used to create the ledgers in order to enter the transaction in vouchers. So as we know that every transaction, there will be two accounts involved. And it is for these accounts we are going to create ledger. For example, Uday commenced business with cash rupees 10 lakhs. So here the two accounts involved in this transaction are capital and cash. So because Uday is a proprietor, he is investing money. The money invested by the proprietor is called as capital. The other account is cash. So we have done a detailed video about identifying the two accounts in my previous video. So if you have not yet watched, please do watch and come to this session. And the next transaction we have deposited into Union Bank rupees 75,000. So here the two accounts are Union Bank and cash. Bought goods from Satvik Enterprise worth rupees 23,000. Here the two account. Bought goods is called as purchase. So one account is purchase. The other account is Satvik Enterprise. Paid salary to Sachit rupees 30,000. One account is salary. The other account is cash. And the next transaction, withdrew rupees 12,000 from Union Bank. Here the two accounts are Union Bank and cash. Please do watch my previous video about journal entries, so you will come to know how to identify the two types of account. Okay, once you identify the type of account, now let's see how to create ledgers for these accounts in Tally. In my last video, we saw how to create a company, and in this video, let's see how to create ledger. So before creating the ledgers, first let us understand the default ledgers. So as soon as you create a company, by default, there will be two ledgers. So one is cash, the other one is profit and loss account. So you just want to see that, you can just go to accounts info, just press enter. Ledgers. So I just want to display all the ledgers that has been present here. So this is a new company. I have not created any ledger. Just go to display. We see that two ledgers are present here. So these ledgers are present by default. One is cash. The other one is profit and loss account. So now let's see how to create ledgers. So from accounts info, you're just selecting ledger. So here we have the options to create the ledger, display the ledger and alter the ledgers. So let's start with creating ledgers. Just give enter and create. Now it takes you to the ledger creation screen. Now here enter the ledger account name. So I have given you 5 transactions. For example, first one is Uday Commence Business with cash rupees 10 lakhs. Here the two accounts involved are capital and cash. As I said, cash is a default ledger. There is no need of you creating cash ledger. So the other account is capital. I have to create a ledger for capital. So just enter as capital. Alias is an alternative name for your ledger account. If you want, you can give an alternative name. Otherwise, just press enter. So capital, it comes under which group? Capital under. So here on the right side, you have a list of groups. Nearly 34 groups have been listed here. So we have to select the appropriate group for the ledger you have created. So here capital, it comes under capital account. By default, you have capital account here. Just press enter. So next option, it is asking inventory values are affected. No, inventory is nothing but stock. So capital is nothing but the cash invested by the proprietor. So inventory is not going to be affected if the cash has been invested. So it is no in this case. So only in case of purchase, purchase returns, sales, sales returns. Only in these cases inventory values will be affected. So only for those ledgers you're going to set this as yes. So all other details are not required now. We're just going to create a simple ledger without any details. And this opening balance also is not required. I'll tell you why opening balance has been required. So now we are just going to create a ledger and identify to which group it belongs to. That's it. Accept this, enter. So next statement, we had deposited into Union Bank. The two type of account involved here is Union Bank and cash. As I said, cash is not required. So first we have to create as Union Bank. Union Bank, under which group it comes? Any bank name is being given, it will come under bank account. So select bank account from here, just give enter. Next one, bought goods from Satvik Enterprise, rupees 23,000. Bought goods is called as purchase. So we have creating the ledger called purchase. Purchase under purchase account. Inventory values affected, yes, and just accept this. Next one, we are creating as Satvik Enterprise. So here we have purchased on credit base. So purchase will be on the debit side, Satvik Enterprise will be on the credit side. So select the option called sundry creditors. Or why sundry creditors? Because we have purchased from Satvik Enterprise. So we have to pay the money to Satvik Enterprise. So who's a creditor? Creditor is a person to whom the business owes money. So here in this case, business has to give money for purchasing goods from Satvik Enterprise. So it comes under group called sundry creditors. In simple, you can understand purchase always comes on the debit side. So Satvik Enterprise will be on the credit side. So select sundry creditors. Maintain balances bill by bill. It's not required. And just accept the details as it is. Paid salary to Sachit rupees 30,000. So here the account created is salary under indirect expenses. Inventory values affected? No, and just accept this. Withdrew rupees 12,000 from Union Bank. Here the two types of account will be Union Bank and cash. We have already created an account for Union Bank, so there is no need of you creating again. So this is how you create ledgers for these transactions. Hope you have understood this. So we saw how to create the ledgers, and in order to create the ledger we need to identify the groups. So what is a group? It's a collection of ledger which are similar in nature of transaction. By this classification you can generate reports which are meaningful. So let's see some of the commonly used ledger and its group. Capital, it comes under capital account. Drawings under capital. Purchase, the group will be under purchase. Purchase returns under purchase account. So capital and drawings under capital account. Purchase and purchase returns will be under purchase account. Sales returns will be under sales account. Stock, the group is stock in hand. Cash in hand, and it is a default ledger. Bank account. Debtors, under sundry debtors. Creditors, under sundry creditors. Furniture, building, land, vehicle, machinery. So all these comes under fixed asset group. Salary, rent, advertisement, general expenses, traveling expenses, discount allowed, insurance, carriage outwards. All these comes under indirect expense. Wages, carriage inwards, freight and carriage, manufacturing expense, fuel and power, all these comes under direct expense. Discount received, received commission, interest received, received rent. So all these are under indirect income. Bills receivable, it comes under current asset. Bills payable under current liabilities. Outstanding expenses will be under current liabilities. Prepaid expenses, current asset. Depreciation, indirect expense. Loans and advances, one is asset and the other one will be loans liability. It depends upon the loan. If you have given the loan, it comes under loans and advances, and if you have taken the loan, it comes under loans liability.
That's all for today's session. Thank you for watching this video. If you like the video, give me a thumbs up and make sure you share it with your friends. See you in my next video. Until then, take care and keep smiling.